Welcome back. We're in conversation with Ramdev Agarwal, Chairman of Motilal Oswal Financial Services, and Manish Chokhani, Director at Enam Holdings. We got a top-down 30,000 feet, not 30,000, maybe 10,000 feet view about what the market macros, the political aspect is looking like, and what kind of implications that could have. Let's dig it down deeper into what they like and what they really like in that sense. Gentlemen, great to have both of you here once again. Banks and financials. I want to start with that. And Manish, you are a big votary of that. You were just telling us what you tell foreigners when they say that market is expensive.
Look, take the underlying thesis. If you're a 4 trillion thereabouts
First,
economy.
Private or public?
I'm coming to that. Give me a second. If you're a $4 trillion odd GDP and you save roughly 25%, you're saving $1 trillion a year. Unlike the developed world, which is soon becoming emerging markets, we are becoming the developed world. If you save $1 trillion a year and we are still putting half of it into fixed assets like gold and real estate. So we haven't yet financialized that. So your trillion is going to grow and your share to financials is going to grow. Within the current $500 billion, we are putting 25 billion into equities, which is 4% of your 4% or 5% of your saving number. That number has to grow. Banks, which we think at 150 billion of deposits, we are kind of petering out, and how will you get CASA, and all funny arguments come. The amount of money which is going to go into financials is just so staggering that whether now it's a bank, whether it's a capital market player, whether it's a stock exchange, which you've seen what's been going on with BSE, MCX, and just watch what happens when NSE lists over here. So there is so much plethora of options over here that you pick. Like I gave you a menu, you think public sector banks, are they going to repeat mistakes which they made 10 years ago? I don't think so. With credit bureaus coming, with the people making 17-18% ROIs, they can't be trading at half-time book. And if there's a cycle ahead of you, all the people who dismiss PSUs, they all are holding defense stocks, railway stocks, power stocks, best performers of last year.
And Ramdevji, you always talked about the huge deluge of financialization, demat, people coming into the capital markets, and it's picked up in a huge way after COVID, right? So which are the top ideas there? I mean, because there are so many different things, right?
Yeah, so fortunately, it is a financialization part, but the intermediaries, they are driven by digital business model because you cannot handle millions of guys physically. Okay, so it's all through the digital platforms. So whether you see the broking platforms, I mean, I remember in 87 when we started, 200 crores was the daily turnover. And there were 500 brokers, and that settlement used to be painful on T+15. And actually the settlement used to happen in T+21. Okay. So that was the kind of thing. And now you're talking about T+1 and probably 0. T+1. And what is the turnover today? It is 250 lakh crores per day. I have not seen any industry which has expanded 1 lakh time in 30 years. There is no industry. And it's still growing it. It's not that it's ended. Even the current year growth is about 50-60%. So I think it is unprecedented what is happening.
So exchanges?
Everything, let me tell you. First, the guy comes in. Okay, he comes in with a very 50,000, 1 lakh kind of a booty. He wants to experience. He's touching the water. He's just touching the water. And then he has a lot behind. Now, it is a tsunami kind of thing. See, you had a 30 million in 75 years. And 130 million in post-COVID, in 4 years. Now the run rate is 3 million per month. You can do your numbers. We are headed to become 500 million demat accounts in next 10 to 12 years. And it's a journey. Okay. Now, what happens is, just the demat accounts cannot do the markets. What you need is underlying corporate earnings. So if the corporate earnings cycle, after a long time, it is revived and it is on upgrades. So if by my corporate earnings go at about 15-17%, and these guys, they make anywhere between 12 to 15%, forget about 20-25, 12-13%, it is way above the fixed income.
I'm rushing you, sorry, but that only because of the paucity of time. Zomato is a big holding, and disclosure, this is not a recommendation for our viewers to go out and buy, but this is just for educational purposes more than anything else. Why do you like it in such a big way?
I mean, they've not made money. They're just going to start making money. And mind you, they don't have any balance sheet. It's only P&L.
Right.
So everything is written off. Right. So your ROIs are going to be like 50, 60, 100%. So once you have, see, in valuation, I mean, unfortunately, we do too much of these tables and all. So when you have a high ROE and high growth, see the P multiples are not going to be 20, 30, 40. You're talking about 100, 150, 200.
P multiples.
Yes.
तो क्या हो सकता है Zomato
अभी
आपके हिसाब से?
अभी और क्या बोले बताइए?
I think
It's not about
Manish, it's going to be a big contributor to the.
I'm on a QSR board, so I'm very happy to hear that they're putting more riders in. We can deliver a lot more.
I think it's going to be a big contributor to Ramdevji's 10x. You said 10x or 100x?
No, I do think in India, look, it's a question of where will you sit
Right.
to take the ride.
Right.
Yeah.
Because as long as you are convinced on the business in a bull market, you can't keep changing your horses.
Correct.
So if this cycle is going to run for a longer period of time for the economy as well as for markets, if I understand financials, I deserve to make money there, not somewhere else.
Correct.
If he understands, wherever he's investing, he deserves to make money there.
One other segment, real estate, you're very bullish on. I mean, again, it's out there. I mean, we just have to look around, right? The amount of real estate construction, the pace at which it is getting sold, price increases which are happening, getting absorbed easily, interest rates where they are, but no slowdown in sales. Just talk to us a little bit about that, Ramdevji.
I just read while coming in the newspaper, in Singapore, the house prices have peaked out after 7 years of relentless rise. My sense is we have 10 years ahead of real estate story. It's just about 1 or 2 years. I mean, I think the bottom was COVID time, just pre-COVID and or COVID time. And government had to give a concession for the stamp duty and all. I think 21. In 21 there was a concession.
I think the last
21.
peak in cities like
No,
Bombay in
concession was
prices.
in 21.
COVID time.
COVID time, no? So 21 or 22, it bottomed. Like 21, it bottomed. So this is just about a year. This is just about the beginning of the real estate cycle. I think the issue is that it is going to be huge, long and vertical. The issue is that how does the this so-called real estate companies they play it out? I mean, how ethical they are. I mean, of course, with the RERA and all, far more cleaner accounts will be there. How they play, how they remain disciplined. They get over-leveraged on the way. Somewhere they become over-leveraged and they end up they spread their resources thin.
कि बाजार में भाव और भाव, as in price and emotion, if you get those two aligned, that's only when you make money. So don't get over-exuberant, because it is a fact also that you pay a very high price for a cheery consensus.
Correct.
So right now we are all in a good mood. India is doing well and the prices are reflecting that. So look for things where there is little pessimism. For example, that's why I gave you banking. There's so much pessimism. It's going to die. The cycle is over.
Yes.
That's why it's interesting.
Yeah.
So if you get the price and the emotion cycle aligned, I don't buy things where they are over exuberant or this whole narrative is going on. Stories are going on. In momentum, they make tremendous money. But as a value investor, it's very hard to hold on to the coattails and take the ride. So that becomes technical.
Let's end with things which are in exuberant zone, where there is cheery consensus. Manish.
So
Two or
first
three-
of all, I
two or
think
three
the
areas.
I think the developed world, this belief that US can do no wrong and the dollar, almighty dollar, will forever rule. I think our underlying assumptions are going to change.
Okay.
Like it happened with that era of zero interest rates, infinite multiples has changed. There's a regime change. I think that is here to stay.
Okay.
This decade normally should tend to be the decade of value, not of momentum. And I think that change, when we talk of real estate, we talk of commodities, we talk of hard assets. Manufacturing is a huge theme in India. I think there is a regime change happening over there.
Where is exuberant pockets?
In our market, I don't think yet. I find it's crazy in the SME exchange, for example. It's like the new Calcutta Stock Exchange, sorry to say that. But the stuff which is happening there, what is happening on the options trading side of the market, I think people are a bit carried away there. And, corrections, something is good if things take place over there.
Ramji, exuberance, where do you see it?
Exuberance, yeah, I mean, the kind of
crazy.
option volumes and the oversubscriptions and all, I mean, that scares you. Like, established banks are about 15, 16 multiples, and the guys who, I mean, literally they are just about born. And the kind of, so that exuberance in the some segments of small and mid cap, and including SMEs and all, that is a little scary. And that will leave very bad test. So what I'm more concerned about is that when a lot of people are coming, they should not be accident. Because I want 500 million people to come in the market.
And then stay.
And stay,
invest and
of
grow.
course. Invest and make a lot of money.
Yeah.
And that's good for the nation. I mean, that's how the real money will move. Savings will move to the real economy. And then, that circle you see is going to be very, very rewarding, and it will be secular. I mean, when the economists will say 6%, you see what is happening with the GDP growth rate also. I don't think today, I think S&P or somebody has upgraded, they said 6.3 for this year and 6.9% for 24-25, which is first number I've seen for 24. If by chance it is 7% next year, I don't think it is there in the price.
Got it. Gentlemen, great speaking with both of you. Wishing both of you, your families, a very happy Diwali once again from all of us here. Thank you very much for joining us.
Thank you. Thanks for having us.
Thank you.
Wish all of you and the viewers very, very happy
Thanks
Diwali.
very much. Thank you.